Hello traders. In today's video we will talk about a new strategy using one indicator. And this strategy works well with all markets, especially the Forex market. First, we choose a 1-minute frame, and it can also be used on a 5-minute and 15-minute frame. Second, we will choose Hack and Ashy candles, as regular candles can also be used. Third, we will use this indicator, which is the only indicator in this video. We will use it to find entry and exit points, and these triangles that you see it here. It will be the basis of this strategy. To start applying this strategy, let's start searching for this indicator by opening the indicators library from here. And in the search box, type the following: L2KDJ trading system. Then choose this indicator, which was coded by Black Cat. After applying the indicator to the chart, we must change some settings. So let's open the indicator settings from here. In the first field, the number will be 6. In the second field, it will be 5. And in the last field, we will set it to 20. As for the colors, you can leave it as it is, or choose the colors you want from the style section here. After preparing the chart and adjusting the settings, let's see how this indicator works. When we see these triangles, this means that the trend is in a downtrend, and there is buying pressure that will change its direction at any moment. And in this case, we must wait for a green column to appear after several red columns, and the candle that corresponds to it above will be the target candle to enter. Conversely, when red triangles appear at the top and we see green columns near them, we will wait for the first red column to appear, and then we will enter a short position. A red triangle also appears here, so we will wait for the first column to appear in red, and we will enter a short position as well. Here we see several red columns, and we also see some yellow triangles that indicate purchasing pressure, so we also wait for the first green column to appear, and then we can also enter into a buying position. Here we can see the same conditions, but because the red columns did not touch the yellow triangle, we will consider it a false signal, and we will not enter. As for here, we notice that the red columns touch the yellow triangle, so we will wait for the first green column to appear, and then we will enter. Like we said, we don't enter if the red columns did not touch the yellow triangle, because this means that buying pressure is weak, and the trend may not reverse. Let's see another example. Here we see red columns facing down, and we also see the appearance of yellow triangles touching these columns, and then we saw a green column appears, so this will also be an entry signal. Here too, red columns touch the triangle, followed by the appearance of a green column, and the result was a good rise in the trend. Here we notice that the columns are far away from the triangle, and for this we will consider it a false signal even if there is an increase in the price afterwards. As for here, it is considered a valid signal, especially after the red columns touch the yellow triangle. So the first green column will be the entry signal, and the first candle that meets it at the top will be the target candle, and the result will be an increase in the price as well. Here, the red columns touch the yellow triangle as well, so the appearance of the first green column will be considered as another buy signal. So, we wait for the red columns to touch the yellow triangles. Then, we wait for the first small green column to appear, and this column will be our entry signal. But when we find that the red columns do not touch the green triangles, this means that the signal is weak and may not work in most cases. That is why we must avoid such signs, because the closer the red columns of the triangles are, the better the result we have. There are many good signals for entry, but adherence to the conditions is the basis for the success of these signals, especially waiting for the first green column to appear. The risk-reward ratio in this strategy will be 1 to 1.5, and the lowest price of the previous red candles will be where to place the stop loss. It is also possible to use 1 to 2, but it is not recommended, unless you use other indicators that will show that the ascent is still continuing. Finally, thanks for watching, and don't forget to subscribe.